Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section and social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with 16 wins and 3 losses for a win rate of 84.21%. So I'm right at the goal of 85%, but I think that I should say at least 2 of my losers were in the morning. So it looks like we're back to the morning chop, the morning fake outs. There was a point in time back, I don't know, months ago where the first half an hour it just did nothing but fake out both directions. You could literally just take the second fake out and it would end up being the winning trade. But yeah, it would fake out like so many times in the first 30 minutes that almost every day or every loss I had was a morning play. The 10-minute ORB, which is open range breakout or breakdown, which is usually very, very consistent because you get a lot of continuation. But once in a while, the market goes through a phase where it likes to chop the first 30 minutes and just trap people on both sides before it picks the direction and goes. And it's just been doing that. Once in a while it does that. You just got to remember that there is no secret strategy that's going to be 100%. I mean, most of my strategies are 80 to 90, 95% accurate most of the time, and they go in cycles where they'll seem like they're almost 100% accurate and 95% accurate. Then all of a sudden, out of nowhere, just it's not as nearly as accurate. It's not the strategy, it's the market conditions. You got to keep in mind that the market's not going to stay the same. It's not going to do it's not going to do the same stuff. It's going to do something different. The market makers, the name of the game is to trick and trap retailers and take their money. You always got to remember that it's a game of theft. They want to take your money. They want to steal it. So whenever you see these no-brainer patterns and stuff, especially in large time frames, the market makers know the rule book. They know the game. They know what you're looking at. They know what you're going to play. They see what you're going to play with your orders, and then they take it. So you just got to remember, you got to think outside the box sometimes on when you're playing in the market, because the market makers know. Basically, you have this like golden book that's I know a lot of people teach different strats, but more or less 50 to 60, 70% of them are pretty much the same as far as like patterns and stuff like that. And the market makers know this. So when you see like a head and shoulders on a daily, and it's very, very defined, and the market makers know this, and what they do is they set these massive traps up, then they break the neckline just enough to get people in, then they'll rip it the other way. And it happens all the time. You see it intraday, you see it on daily charts. It's just the name of the game, and you're going to understand that basically the moral of the story is that, you know, nothing's perfect. No strat, no system, no nothing is going to be 100% accurate or perfect. It goes in cycles and it comes and goes, and it's up to you to make adjustments as according. Because when we started getting double fake outs and I started taking losses on this double fake outs, I started waiting out the first 30 minutes. You need to make these small little tweaks or adjustments to avoid losses and keep going. So you just got to keep that in mind when trading, that you need to you may have the perfect set up a strat, and just one day it's not so perfect, and you just need to adjust and do something different. That's why I have so many strats I use, and I play different strats, and one of them always seems to work. And so with that said, I'll just stop rambling. I just wanted to put that out there, that things evolve and market conditions evolved, and it just seems like it's very trappy, more than usual this past few months. So it feels like since we've had this massive run up since November, that we've just seen a lot of FOMO, ridiculous price action. So with that said, traded Israel February 5th, which is Monday. SPY puts in a 492, which is right here. Blow it up a little bit. Got pre-market lows right here, 493, and I think when I called it, it was right here, right at the 493 area. So I rounded down. 492 is basically down here at this resistance level and support right in through here, right in here. So, well, actually, technically it's down here, but I liked it. It was close to this area right here, this pivot. You can see it's resistance. It's resistance now. It's support right in this area. It's 492.30, but I round down or up to the nearest dollar or $0.50 pre-market because it's just easier to remember. So, and as you can see right here, this is the chop we're talking about. First 10-minute candles red, so I took puts at new lower day. I took the 49.35 puts at 610 and it bounced. So one of the things I like to do is if I do play the open range and it ends up being a fake out, sometimes I just hold it just because of the double fake out, where if it does look like it's gonna break down, which it looked like it was to me, so holding it. It didn't break high day, but sometimes the double fake outs, what they do is they fake out at the bottom. They'll come to higher day, then they'll fake out and to kind of get people to like dump their puts, then jump to calls, and they'll get into calls. That puts are stopped out, then it flushes like right here, but it didn't quite break high day. But that's what's normally been happening. So instead of me just taking the loss and jumping in calls and taking 2 losses, I'd rather just take one and wait to see what happens versus taking 2 losses and one of them being right, the initial position being right. Because I've seen that so many times lately where I'll take puts like I did right here, then it'll pop up the higher day, fake people out, then it will actually slam. So it just market maker games in the morning. So yeah, I took puts right here. The my toss almost crashed for some reason. Let's see. Yeah, I took the 49.35 puts at 610, and they went from 610 to 1850 in this dump right here. It popped up, it held a little bit of a bear flag right there, big red candle, flagged up, my bear flag, then it just broke lower day, and then it sank. So ended up being a good play, just had to weather through the storm. Then I took puts at 1040, which is right here. FU setup right here, massive red candles. Green candle broke below the 491. I took puts. I took the 49.20 puts at 770. Then it went from 770 to $11 right there. So that ended up being a really, really good play. Then I took calls at 113, which is right 113 right here. Yeah, right here. Got back up to 4, almost high day, up to this area where it was faking out and the bear flag up here. Had this massive run, then it pulled back a little bit to almost to the 20 EMA, and then popped back up. Once I get over this 493.30 area, I grabbed calls. I grabbed the 49.50 calls at $5, and then went from $5 to $5.60. Not much of a move, so it didn't really go. I was kind of hoping it'd go to higher day or maybe even possibly break it, but it did. But it just was over here. It didn't pan out the way I thought it would. I thought I was going to get this move right here, but it just was delayed. So I took puts at 307, which is right here at 494. When I got below the, let's see, I think did I grab it down there or did I grab it right down here? I'm not quite sure if I grabbed it underneath the 493.80 area, or if I grabbed it underneath. No, I grabbed it in this candle. So I probably grabbed it maybe under 493.50. I'm not 100% sure where I grabbed it here. Sure if I went to a smaller time frame, I probably could spot it, but I'm assuming I either grabbed it here at 493.75 or 80, or I grabbed it at 493.50ish area right in here. But either or, I grabbed the 49.50 puts at 350, and they went from 350 to 990. So it looks like I probably grabbed it more up here. That's a pretty big run right there. So I probably grabbed it right up in here, the 493.80. area. So 4 wins, good way to start Monday. Mondays are usually been. There was one point in time where I was losing the first play on Mondays almost every day for like months. It was very frustrating. And then I think I smartened up and I just stopped playing the first 30 minutes on a Monday. So with that said, trade ideas SPY puts Tuesday morning under 492, which is down here at this low, rounded down, get this massive run up. Our first 10-minute candle was green. I wasn't sure if I wanted to take calls or puts, but it broke higher day. I took calls. I took the 42.60, the 49.60 calls at 650, and they went from 650 to 790. Not much of a play. Then I took puts at lower day. I think I took them right here, right underneath the 493.50. To be honest, the 49.45 puts at 790, and they went from 790 to 1430. So that ended up being a really good play. Then I took puts at 1024, which is right here. FU set up massive red candles, came back up. What did I take it? So I took it from 7 to 9. So I probably took it. Yeah, I think I took it underneath the body of this FU setup right here, because this is a pretty big candle. I mean, that's a massive candle. I didn't want to really buy a lower day. I mean, look at the size of the candle. It's 493. It's almost a dollar candle. I don't really want to buy puts underneath this candle because the body to the top of the wick is a pretty good size. I mean, that's almost 50 cents right there. So I figured you get the nice green, nice red candles. You get FU set up. The wick is just very, very long. The body's pretty good size. So I would take puts right underneath the 492.65 area. So I took the 49.35 puts at 7, and they went from 7 to 9.40 right there. So that ended up being a nice FU setup. They've been playing out really, really well and with these strong directional moves. Then I took puts at 12.21, which is right here. I think I took it a lower day. I think I took it right here at lower day. Yeah, I definitely took a lower day because look at the bodies of these candles. These doji candles are too small, so I probably took it closer to down here, the 492.20-ish area, thinking that we were going to finally break lower day. So I took the 49.35 puts at 7. And as soon as I get out, it rocketed against me. So, I stopped out at 2. Then I took puts again at 209, which is right here. I think this time I took it underneath the bodies of these candles because I took it in. No, maybe I took it up here. I think I took it up here, to be honest. Let's see. They went from 620 to 7080. Yeah, I think I took them up here. Right up here underneath this 492.50 area is where I grabbed the puts. I grabbed the 49.40 puts at 620, and they went from 620 to 780 right there. So a choppy day, not much. That's a massive red candle. I mean, that's 493.60. That's almost $1.20. Crazy move. So yeah, one loss right there on that. And Wednesday. Traded his room on Wednesday, which was the 7th. SPY puts in a 495.50. I mean, look at this massive run up. 495.50. I call it right here at this low. Probably was up here when I called it. Yeah, so I called it right there at that low, that higher low. First 10-minute candle was red. Broke as soon as it broke lower day. I grabbed puts. I grabbed the 49.70 puts at 750, and they went from 750 to 10. So this is a good little continuation move. But another fake out. If you didn't take it right here, and you were hoping for a big win, there's another thing you got to do with trading SPX and SPY, is that take the base heads and stop holding for home runs. The chances of you hitting a play that's going to go 100% is pretty slim. So it's better to take the dollar to base hits and compound those, because they'll add up really, really, really fast, and they're very less stressful, because when you have fake outs like this, you could be up $2 or $3. In this case, 250. And if you took 10 contracts, you're up $2,500. You're not taking a $2,500 play. You need to really reconsider what you're doing, because most people don't make $2,500 a day, let alone, I mean, most people don't make $2,500 a week, let alone a day. So you got to think about the average person, what the average person actually makes. Some people just have trading with such high expectations and trying to be a millionaire overnight. You're not going to be a millionaire overnight. Millionaires are made over compounding gains and having a strategy and taking base heads. You're not going to get lucky and make that $1 million trade overnight. So anyone that says that you will is an idiot, and don't listen to them. Yeah, if you didn't take that $2.50 play right there, you just lost it, and you just turned into a big winner, a winner to a loser. So don't turn a winner to a loser, especially when you're up $2.50. Just take it. And I mean, if you want to try to ride more, at least take half or 3/4 of the play and just say stop at break even and do it that way. I'd rather just hit it and quit it. I'd rather just get in and out. I don't want to sit in there, because you know how many times where you sit in and play and it's going your way, and it looks good, everything's going good, then boom, news hits out of nowhere, Fed speaker talks, or bonds come out, or some other news comes out, and boom, you're red. In a flash, literally seconds, you have a good play that just goes to zero because of a news event or something comes out. And Feds are always talking. It seems like every day there's a Fed talking, and they're always messing up plays. So I'd rather just get in and out of a trade and not have to worry about, something happening. I'd rather just get in, take the money, get out, and sit on the sidelines and wait for the next opportunity. And if something does happen, I'll jump on it. And if something does happen and I was wrong, I don't have to worry about taking a loss. You know what I mean? So it's peace of mind being in and out. I prefer to play that way. If you don't want to, it's up to you. You can play any way you want. You don't have to do what I do at all. You can do what you want, play how you want. I'm just showing you what I do and how I do things. Getting in and out is just easier for me, and I have less to worry about. So 250 right there, nice little play. Ended up being a fake out. Then I took puts at 10 o'clock. Why did I take puts at 10 o'clock? Right? Oh yeah, right here is where I took puts. Okay, I remember this now. I took the puts. I sold. It popped back up. When it came back down, when it came back underneath 496 again, I reloaded. I grabbed the 49.70 puts at 720 this time, and they went from 720 to 930. So yeah, I took the play, came back up, reloaded, and took it again. So yeah, I got two nice plays right here. And then again, like I said, you get $2 plays, you got to take them, and because this happened shortly after it popped, and I was kind of surprised about this. This was probably news. This was probably 10 o'clock news. If I had to look, it'd probably tell me that was 10 o'clock news, because it's usually news at 10 o'clock. And I took puts again at 10:54, which is right here. I got these massive red candles right here. FU setup. It didn't break high a day, so it came back down. It made a nice little small red candle, a green candle right here. It didn't really break high a day. It tried to, and it came back down. So when it broke below this 497.50 area, I took puts again. I took the 49.85 puts at 730, and they went from 730 to 970 right there. So another nice, good base hit. Because you get an FU setup right here. Green candle didn't break high a day. It had a green candle, but it opened here, and it tried to make a run to high a day. It failed, and when it failed, that's when I decided to take puts right here. I don't know if I took them underneath the body or the wick, but either way, I took the puts right here. Worked out. I probably took it underneath the body, underneath the 497.40 area. Yeah, the 497.40, and yeah, they went from 730 to 970. So another $2 plus play. So I'm slapping $2 plays, 1, 2, or 3 right here. You don't need to catch plays like this. I mean, you could have, but the chances of you hitting a monster play is not. Just wait for the right setups and take them. So Then I took puts again at 138, which I think is no, I didn't take it. 138 right here. Fake out, I think was the reason why I took it. I'm not quite sure why I took this. I got the break a higher day, came back down quickly, didn't break below this 497. I remember I was watching this and it didn't break below 497. It popped back up, made new high day. Then it faked out, and I think that I jumped in front of it, or maybe I grabbed it. I grabbed it, what, 640 to 810, so I think I grabbed it. I'm not quite sure why I grabbed it right here, to be honest. I might have grabbed it when it came back in underneath 498.20 or under 498. I think that's it. Okay, I think I remember. I grabbed it underneath 498 when it came back under 498. I think I do remember this now. It broke out higher day, and when it came back under 498, it was getting close to 500. So I was thinking, okay, maybe they're gonna undershoot this. I don't know. Let's see the 7th, which is right here. Yeah, 498. But yeah, broke out, came back in. When it came back underneath 498, that's when I grabbed the 49.95 puts at 640, and they went from 640 to 810. Oh yeah, that's why I grabbed it. 5,000 on SPX was right here, if I remember correctly. Let's check SPX on the 7th, right? Yeah, 5,000 was right there. That's why I took it. So yeah, 5,000 being a big round number on that. So yeah, that was the play on Wednesday. Now on to Thursday. Kind of a small red day, not that great day. It's a trade ideas room. SPY puts under 497, which is down here, rounded down to the pre-market low. First 10-minute candle was green, but I took puts at new lower day, and ended up being a loss. I took the 49.85 puts, and this is what I'm talking about right here. This is exactly what I was talking about earlier. Gets you in, new lower day, fakes out, comes back up to this area, not higher day, but this area of 498.20. I mean, I probably would have taken calls right there if I already wasn't in puts, but you see this all the time. Faked out in the morning. So when it fakes out in the first direction, I'm a little skeptical of the other direction, because that's when I start thinking, okay, it's gonna be a double fake out. And I think I stopped out at 4 because I had the 49.85 puts at 640, and I stopped out at 4. I think I stopped up because I thought maybe it was gonna break out right here. It didn't, so I stopped out. Then it came back down, and I actually think it turned red. So I was green. So I was actually kind of annoyed with that. But it took calls at 11:57, which is right here. Kind of questioning why I took it there. I see why I did. It didn't break higher day. It came back into this area of 498.20, and it got rejected. Got rejected here. Well, here, and here. I mean, it got rejected like 5 times, 6 times right there. Then it went to break new lower day. It failed to break that. So, okay, I was like, okay, it's going to range. On the range days, I don't like shorting at the top of the range. It's just asking for trouble. I don't like buying calls at the bottom of the range. That's asking for trouble. Because you buy calls at the bottom of the range, they could open the door and that thing could flush. Or you buy puts at the top of the range, it could squeeze. I don't like it. What I end up usually doing when I start and realizing it's a range day, I will start looking in the middle of the range and catch the middle of the range plays, and that's exactly what I did right here. You get the body, and the body. So when it broke over the 497.80 area, that's where I grabbed calls. I grabbed the 49.95 calls at 510, and it went from 510 to 550, and I think I stopped out. I think it just kept going back and forth, and I finally just got out of it. So. Then bond market, 1 o'clock, which is right here. I took the 49.85 puts at 470, and I took the 49.95 calls at 390. So the calls ended up paying. The calls popped. They went from 390 to 670, and then the puts went from 470 to $2. So very, 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 very tiny win on the bond auction. Very, very tiny. Tiny wins just all day. So small red day just from that morning loss was a little bigger than the last two plays. Not much. I don't even think I was like $500. I don't remember. It wasn't too much. But anyways, yeah, I hate the choppy days. When you start realizing that it's a choppy day, play mid ranges like right here. The VWAP, when it starts pushing through VWAP or starts breaking down VWAP, or you get the bodies of these candles like right here, and it breaks below, like this 497.80 area, you could have caught that play. Or, you see the bodies of these candles up here, you could have caught that one. You just get to play the mid-range when you have these range days. That's the only way to really safely play it, or just don't play at all, because they're kind of tricky and they're trappy. So Friday, SPY puts under 498.50, which is 498.50 is down here, down at this low right here, just rounded down a little bit. Massive pop on news, and it sold off. First 10-minute candle was green. Didn't take puts. I waited, took puts right here. For some reason, I decided to take puts underneath the bodies of these candles, which in theory it looked pretty good because it looked like a bear flag. You get the drop, I get the doji, you get the inside candle right here, and it opens up right here, and we break below it. We're gonna flush. So I grabbed puts. I grabbed the $49.95 puts at $6. It didn't. It got just enough to get in. Then it popped the other direction. Then I ended up stopping out at 3. So I ended up stopping out of that one. Then I switched to calls at 10.50, which is right 10.50 right here. No, 10.50 right here. I'm quite sure I grabbed it there. I'm not quite sure at all. I mean, it's a small ascending flag, but I caught it here. Yeah, I got the 50-15 calls at $6. So crazy. So SPY was over. The SPX was over 5,000 at this point, I think. And yeah, because this was at 501. And we're approaching 500 right here. Oh, that's why I grabbed it right here. Okay, this is why I did grab it. Because we're at 500 on SPY. And everyone and their mother is going to short at 500. Everyone's going to pile into puts. Everyone's thinking 500 is going to be the top. The problem is when you have these big round numbers, it starts to slow down a little bit, starts to act like resistance a little bit, and maybe you get a small little pullback, and it ends up being a huge, huge trap. Because what happens is market makers know that everyone's going to short at this round number, and while people are piling the puts, they're going to pop it and squeeze everyone out and take their money. So the 50-15 calls I took at $6 went from $6 to $7.20. It worked out right there, but this is the trap I was talking about. I thought it was going to end up. I thought this was probably the trap, but no, this was the trap right here. This was the trap, which I did take again. But anyways, yeah, it popped over 500, quickly got rejected, came down the VWAP, bounced off VWAP. And this was the trap. So when it rejected 500 pretty good right here, everyone started jumping into, piling into puts, thinking, okay, that's the top, that's the top. And they piling in, they're getting ready for another major drop. But no, it comes back up to 500 and pops right through it. So this was the trap right here. This was the trap. The fade from 500, people piling into puts, then it squeezes them out right here. That was the massive trap that I was talking about. So I took calls at 12.26, which was right here. I took the 50-15 calls at 470, and they went from 470 to 620. So that ended up being a good play. That was the ideal squeeze right there. You gotta always remember that SPY, when it comes to these really big resistance and support areas on the daily and weekly charts, especially the daily and weekly, SPY will overshoot or undershoot. So if you see resistance, remember, resistance, support and resistance is an area, not an exact number. I'm not gonna say supply and demand. I hate that lingo. Support and resistance, old school. So I'm gonna keep using it. is an area, not an exact number. So when it gets to these big round numbers like 500, SPY likes to overshoot or undershoot, and undershoot meaning that, maybe SPY makes it to 499.50 or 499 and then just turns around. Or it does manage to get to 500, they're going to overshoot it to $1 or two and have a gamma squeeze or a short squeeze or whatever, because that's what usually ends up happening. It overshoots $1 or two of the number, especially on the daily. And this is exactly what ended up happening. 500 overshot $1.50 plus, so ended up being a good play. So with that said, pretty good week, considering didn't like the chop, a couple fake outs that got caught in, but you're gonna have them. You're not gonna get every play. You're gonna get fake outs. Hopefully something happens this week. I get a lot of inflation happening this week coming up, with Biden possibly being incompetent being as a president with his nice can't stand trial, but yeah, they're gonna have nuclear codes around the country, which is kind of stupid if you ask me. Maybe something happens soon. I don't know, but hopefully something does happen, because this sideways action, this slow grind up, this gap and grind. I mean, this is just so annoying. You gap up, then it grinds, and you gap up, then it grinds. It's just I hate this. I hate the gap and grinds. So hopefully next week will be better. We'll have some good plays and stuff like that. So that's gonna do it. That's the recap. Hope that you liked it, and thanks for watching.